my end. Not sure if that's.
Sean, do you hear me?
I hear you, but you're frozen. At least
Can't hear Sean.
what I'm seeing.
Did I put this in the right place? What's up, everybody? Jay Do and Jesse coming to you from the Banking Bros studio here, HQ at the Cash Compound, for our coaching hour, Thursdays at noon 10. Appreciate you being here early. Navigate your ventures, or shall I say on time.
Sunny Colorado. Fantastic.
Okay, I don't hear Coach Sean. I don't hear Coach Sean. Maybe you guys do, but Sean, I think, can hear us. So, Sean, why don't you start and introduce yourself? And hopefully, it says still frozen on his end.
Okay.
Oh, there.
Just sent us a message. Sean, can you hear me?
I can hear you. Can you guys hear me?
Can hear us.
Okay.
I don't hear him. Do we know whether or not?
Navigate your ventures. Can you hear me
Navigate
out there?
your ventures. Can you hear us? If you could comment, because you were here last week anyway. If you've got a new question, that'd be a good way for us to know that you hear us. And then we could go ahead and be fielding your concerns. Nelson says, hello, Nelson. Can you hear us?
Hey, Grand Rising, Nelson from Texas. A staple around here. We love to see him. Trying to go over there.
Yeah, Nelson. Can you hear them? Can you hear me?
Assuming you guys can hear us.
they
Jake.
can.
Jake, hey, appreciate you being back with us,
Thank
Jake.
you for that.
Well, let me give you a little bit of we're not hearing everything that we want to hear yet, but let me tell you about what's going on here. Each and every week at Thursday, noon Eastern, what we're going to do is we're going to help walk and talk you guys through the coaching that we give in the save and spend system. The save and spend system is based on a concept that is time tested, one of the oldest financial practices available to an individual to practice complete control of their capital. So we have a culture of control. We want you to join our culture and our community, and you can do that several ways. So you might be seeing us on Instagram. We're at the Banking Bros on Instagram. Shout out to you out there. Let us know if you have joined and you're still here. Questions, comments, and concerns, go in that comment box. If you are on TikTok, we're not live there right now. We have two channels, the Cash Compound and the Banking Bros. We'd love to experience some of your DMs there.
What do you want to know?
Next one, right that. All right, Sean, how about now? Speak to me.
I still got you guys loud and clear.
That's it.
That was it.
That's all we had.
That was
Okay.
it.
So
You got to be smart to do this.
there you go. Somewhere on Facebook, you're going to find us as well, hidden at Infinite Bankers. We have a private group situation going on there. We'd love for you to join. The gate is just submitting one or two things about yourself, so we have the right people inside that community. And our Facebook page, those of you who know the difference, pages and groups and events and all that stuff, that's called the Cash Compound. So we'd love to see you there. All right, questions, comments, and concerns on YouTube as well is where we get most of our traffic today. Go in the chat this afternoon or morning, wherever you are in the U.S. and Canada. But we'd love to help you if you're down here trying to make America great, or you're upstairs in the 51st state. We got you, ladies and gentlemen. We'll send you up to some friends in Canada. This practice, the basic foundation of where we warehouse our wealth, can be done up there in the provinces as well. And I'm looking forward to visiting Kenyatta, the 51st state, next month for the very first time.
Okay.
For the very first time. Coach Sean, you going to be there as well? Tell us, you travel a lot doing this process. You travel a lot with your family. Have you been to Canada? You're going to take me up there, I heard.
That is a great question. We do travel a lot. I've been to 40 plus countries. I lived in Vancouver, Washington, which is just on the other side of the river from Oregon, Portland, Oregon. So right at the bottom of the state, probably 6 hours away from Canada. Never been. Wow. I did live there over COVID, though, so I don't think they were letting us over the border at that point in time. But I'm excited to go. Looking forward to seeing you and your brother here in a couple weeks and having some good fun.
Love it. Now, Jesse,
Yeah, man.
he said during COVID. I thought we still had it. Are we in COVID? Or are we out of COVID? What do you say?
Oh, there are so many things to say.
Yeah.
So many
Yeah.
things.
Yeah.
All right.
Live free, my friends.
Shout out to everybody who's in COVID still. But I guess me, Sean, and Jesse, we traveling the world. We're going to go do our thing. So if you have questions, comments, and concerns, you want to jump off topic for us, we're shooting the breeze here to get things going this morning. But I will share some insight about my warehouse of wealth this past week.
Okay.
If you joined us last week, several of our YouTube commenters have, for sure. Jake, we see you out there. Been to Toronto. Back in the day in college, I dated a girl who's from Toronto. She lives there now. But I've never been to Canada at all.
Okay.
I mean, I've seen Canada from Buffalo, New York, I guess, maybe. I've
been to the coastal cities. I've been to Niagara Falls a couple of times.
Right,
on
right.
the east side. And then, well, I've been
Nova
to
Scotia?
I've been to Nova Scotia and I've been to
Well, you've
New
been to
Brunswick.
Oh,
and-
yeah, you've been up
And then
there.
I've been to Victoria.
So we're going.
Never been in the mainland.
So yeah, right. There's a lot of good stuff going on the east coast of Canada with islands, but we're going to BC. So we're going to Whistler, Canada,
Right.
BC in June. A shout out to anybody up in that area. Maybe you can come find us. I will be the dude screaming my head off and nervous on the bobsled track. One of the excursions I'm doing, or whatever they call it, activities on this trip, is going down that bobsled slide. What do you call it? Tunnel.
You make me think of the movie.
Of course.
Cool
That's
Runnings.
what we're all thinking of. That's what we're all thinking of right now, right?
Feel the rhythm.
Yeah.
Feel the rhythm.
Yes.
So good.
Draw a line down your head so it looks like a butt. Okay. All the great lines from that movie. Love it. Okay. So let me tell you specifically about the tool that we use to have freedom, have peace of mind, have promises, have payouts, and have passive cash flow. Okay. Let's talk a little bit about this passive income. This past week, I had one of my whole life insurance policies. I know some of you out there hearing us maybe for the first time are like, say what? You know,
Yes.
tire screech, train whistle, awooga. What do you mean? But I actually pay money into contracts that are guaranteed for the whole life of the insured person. Okay, the insured person might be me. Let's just assume it's me. I have whole life insurance. I own on myself. The beneficiary will be my family.
Mhm.
And those policies have guarantees in them.
Yes.
I always talk about 4 guarantees. We'll come back to those in just one second. But what I got in the mail this week on one of those policies is my annual renewal statement. Okay. So my annual renewal statement, we hate to see
Your
it when
bill.
it comes to
Your bill.
my bill, right? No, this was no. This was my status. This
Oh,
is my
right.
state of the union
Right.
of my policy, actually. So yes, my bill has been paid. Yeah, my bill has been paid for the year. I paid this particular contract monthly premium installments. So this was just the recap. Here's
gotcha.
how things are. Here's the numbers. Here's the performance. And the thing that I wanted to chat about, I think we brought it up in the previous weeks, but I have a policy that comes due or renews May 1st and another one May 9th. So I have 2, so I can talk about it 2 weeks in a row. And some of y'all out there, including my coaches, are probably hard-headed. So I'll just talk about it 2 years in a row, 2 weeks in a row. What it showed me was dividends. Okay, and a lot of people probably don't quite understand how dividends are involved in these type of contracts.
No, probably not.
But what I'll tell you in shorthand, then we'll expand on each piece as we want to. And shorthand is the gift of participating with this company's growth and performance is a dividend. I get that, being a policy owner. And the dividend on this particular policy was $420, something like that.
Okay.
I'll actually pull it up for Jesse, and he can corroborate the message. $420 or something like that. So here's the question, Jesse, is where did those dividends go? What did they do for me? That's what people want to know.
Right.
And I just found the one we talked about last week, but I had a new one. I don't know where it went. Oh, no. But in the system that we have, I specifically wanted, and I've specifically mentioned, passive income.
Mm-hmm.
These dividends get reinvested into my system, into my policy, into my guarantees, and they buy more death benefit. My policy gets bigger. But They're specifically designed for cash and equity, as we might say. So this particular one, I'll have to find the other one because I told you there's two in May, so I don't know where I saved it. But $238 in this one. And it bought me how much cash passively?
Right. Dividend was 238.
Yep.
And what it bought was 1,237.
Let's go. Okay, guys, what we're going to do here is we're going to take your questions. We're going to unpack that idea.
Yeah.
Now, Sean, you have policies with the same company.
Mhm.
So you are also a mutual shareholder in the growth of this company. But you mentioned a few minutes ago before we went live today, you have not yet got to experience the annual dividend. But tell us what you know is coming. Tell us how this works and how you think about it. Passive income isn't something we've always said, we've always talked about. How do you describe it when you think of it personally, or when you explain it to prospects?
We talking about how I think of the passive income, or how do I think of the dividend?
I would say start with the dividend. Start with the
Okay.
dividend. How do you think of it? What is it? Many people are confused. They don't know how they work. So what would you say?
So I think of the dividend as essentially I'm partial owner of the company. Like you said, the company is going to do a certain amount of business, just like any other company out there. And at the end of the year, depending on how much I participated in the growth of the company, I am going to get cut a check. In this case, I don't take it as a check, but I'm going to get a percentage of the company's success paid out to me in the form of cash that I choose to use to purchase more life insurance, to give me more life insurance, more future cash value or immediate cash value, and a bigger future dividend. So it's really just a bonus for me participating in the success of the company.
Mm-hmm.
Love to
Love
hear it. Love to hear it. Jesse, what would you add or take away to that when you're explaining what a dividend is and how it's involved, or maybe the specifics around mine? And I did find the other one, so we'll talk about that in a second.
Yeah, no, Sean just gave you a 1, 2, 3 combo. If you decide to use the dividend in this way, and these companies have paid these dividends for well over 100 years, all these companies that we personally own policies with, that we personally pay premiums into for this growth, for this protection, for this passive, all these different things. They've done it for over 100 years. Sean's 1, 2, 3 combo of, well, if you decide to use that dividend towards growing your system, your policy, then that death benefit goes up, that cash value goes up, and you stand to earn bigger dividends in the future. Beautiful. Three punch combo. There are other options of what you can do. So that's nice just to know, because we kind of started this conversation talking about control. Sean has decided, he's opted, like Jadu and myself as well, to take those dividends and let it grow our system. Beautiful. You can get that check just cut out to you. They'll mail it to you, whatever, right? And then there are other options that you have. So at the end of the day, being able to participate with these kinds of companies, being able to receive dividends, and then being able to have another step of control over our money in our lives, for me, that's huge. The control aspect as well.
All right, I found the one I was looking for. I still haven't found what I'm looking for. Y'all didn't know I was going to sing this hour. Okay, so the other policy, I have two from this particular company, both come and due in May. I wanted to mention something about that annual renewal. When I get that annual renewal statement for my car insurance, I drive a family van
I just
these
got one of
days,
those.
right?
Yeah.
Right? I'm not happy because inevitably the price goes up.
Sure.
The rate increases. The premium gets larger. In whole life insurance, fellas, does that happen ever?
Stays
Not
level.
once, not ever.
Right.
There we go. So remember that, ladies and gentlemen, as I get older, uglier, and closer to my demise or death, premiums are fixed in whole life insurance, but the dividends, as Sean mentioned, actually get bigger.
Right.
My participation gets bigger. The cash, the growth of these particular policies means the death benefit is going to rise as well, but the cost of keeping the policy actually stays the same in dollar amount. But if you believe in inflation, which I do, the cost goes down because the dollars are actually buying less everywhere else at the grocery store and the gas station. So I can pay the same amount of deflated dollar to buy more and more money in the future. Think about that and chew on that for a second. Before I tell you the numbers on this particular one, maybe Jesse will read it for you to corroborate the message. Put in the chat, ladies and gentlemen, especially our friends who are watching us on YouTube. Appreciate you being there. Go ahead and subscribe. Throw us in the chat right now. Are you making passive income anywhere? Yes or no? And if you are, tell us where. Tell us how. Okay. Passive income. My favorite is passive and residual, meaning that it just won't happen one time. I learned the difference between passive in some places in previous businesses, which was awesome. And then it wasn't residual because I don't get it anymore.
Right.
So I like passive and residual kind of married up. If you have passive income, say yes. Tell us maybe some things you're involved with. Maybe they are dividends. Maybe you've got some stocks. Maybe you own whole life insurance. Or say, no, I'm still working hard, or I'm trying to figure out what's going on. Okay. Let us know in the comments. We'd love to know and talk about some of those areas where you're experiencing growth. Okay.
Jeremiah,
Yes, sir.
Quick question. So you were talking about, hey, I keep paying my premiums into my policy. My dividend keeps getting larger and larger. But do you want to explain to the people what happens when the time comes that you stop paying premiums into your policy? If yours is set up like that, what happens to your dividend at that point?
I'll get right to it right here. Let me tell you the numbers on this particular policy's performance this year, and then we'll answer that question for everybody. And Navigate Your Ventures says yes to passive income on Private Money Club, lending money. Love it. We endorse our friends over there at Private Money Club. We've been a part of that group as well. And the Private Money Club is a private community of people who are looking to it's a dating app for money, dating site for money. Swipe left, swipe right on people who would like to buy your money for a return to you later. Okay, so that's a great community run by our friends over there at Chris Nagel's Empire. If you know that name, that is a great place to look for opportunities, mostly in real estate, for returns on your capital, growth, dividends, etc., depending on what type of interest you have, depending on what type of tolerance you want and risk that you need right now for your money. Love it. Okay, so this particular one with 20 minutes of build up, $422.26, Jesse, for my 2025 dividend, and it bought me automatic, passively, this year's residual went up to
1,628. So about 4x.
about 4x.
$1 creating $4 other dollars.
$1 that I did not come up with.
Right.
Was not out of pocket dollar. One turned into 4. This is the gift from the insurance company. Now, Jesse mentioned there are ways to take those dollars, and Sean asked a question about them. I could take the $422 straight to my pocket.
Mm-hmm.
It is mine as owner of this policy to decide. There are several ways to consider it. Right now, in the growth phase of my life, with my family, the fact that I still work, and my biggest returns on my time, energy, and money are in my business, I decide that my dividends should just buy more paid up insurance, buy more cash value, passive money.
Sure.
Okay, so that's what I've decided. However, I may not always choose that.
Right.
And you as an owner of a policy can choose year to year what you want to do. One of the other ways to think about it, and there are about 4, is to just take the money. Your prerogative, 100%. And many people probably should consider that once they get to what they normally call retirement.
That passive income time.
Passive
of life.
income time of life, when
Yeah.
you do not want to actively work for the dollars. Jesse, I know that you're a long-term thinker. You've been doing this as long as I have. I want to know, when do you think is a good time for you personally, and how do you coach other people? When might I consider dividends not being reinvested into the policy?
Sure. It's a good question, and it could be pretty big, pretty deep if we wanted it to be.
Well, tell us your thinking around it. We want to help people with that.
Yeah, my general philosophy is I would like to work on the things that I care about for as long as possible and advance them, and do that in a way where I'm interactive with my family, my friends, just like I'm doing today. I certainly don't know what that might exactly look like, or what I might add to my plate 30 years from now, 25 years from now. So I'll turn 40 this year. So I'm just speaking in that general time frame, right? Of most people are thinking somewhere along the lines of 65 years old, 70 years old. So
But the way
I
your
plan to
lower
work.
back is and your knees, you might be done by
bruh.
Tuesday, don't you think?
Bro, I'm feeling bulletproof. I'm good.
I
So good. Back is strong.
He called
Yeah.
me frail last week after we stopped filming. He literally called me frail.
I'll let the people judge. So I don't know what all I'll have on my plate, but I certainly know that I do want the option to be able to have passive income and turn that on and let that begin to supplement whatever I might have going on when I choose. So if I use that typical time frame, it could be 25 years from now, 30 years from now, 65 years old, 70 years old. Now, you could really have some cool conversations in the family context when you consider what it would look like for you to build a system of these policies and how that could play intergenerationally. Am I even going to be the person who's paying the premiums on the policies that I currently own, or will our children assume that? And then that be a form of passive income that comes to my wife and I because of the legacy move
Right.
that our children will have of when we do graduate, getting that big, income tax-free windfall. So hopefully that's not too much too soon. It's a big question. So you might have to ask me again if you want more.
No,
of an
that's
answer.
fine, because I'll go to Sean on this idea. And the reason it might be too big too soon is when we are talking about the save and spend system, the basic philosophy here and concept is infinite banking. And infinite banking is maybe tough to handle for a newcomer, a person who does not yet own whole life insurance. So this is what I want to pose to Sean here. Sean, many people think of passive income, the word retirement. Hey, what is the number you need to be able to be free? Most of the people out there, I had a great lunch with a friend of mine on Monday, Sean. And this man has been my friend since college. We go out twice a year, have some lunch. This man is a working man. He's a W-2 man. He always brings up, knowing that I have interest in it, his financial picture. And that financial picture always talks about returns on his 401k currently. His outside money that is not matched by his job that he puts into the market.
Mm-hmm.
His 529 plans he has on his two boys, all of it gets brought up. That is normal people's world, Sean. It is not the world we talk about here. People want something different. They're thinking different here, but you got to catch them where they are. And that's what Jesse was saying. Did I go too deep? Sean, how do people determine, or when should they determine when passive income time is? What is the freedom number they're looking for? Do people think about that? Can we help them understand that a little bit?
I think essentially every person out there does not know their freedom number. That's the general idea that I've got coming across the conversations that we've had. They don't particularly know how certain it is that they're going to reach that freedom number. But essentially, you want to add up all your bills, everything that you're paying on a monthly basis. And then let's say it's $7,000. $7,000 is your family expenses. When you have $7,001 that you're bringing in passively, you could stop doing whatever you're currently doing for work and start doing what you want to be doing in your free time. So we're going to help you figure out what that number is. And then you have the multiple of that. So that's just what we need to get to that point of, I no longer have to do what I need to do to survive. I can live. What do I want to do now? And the idea would be, how big do you want to grow that? Cool. You're doing this with $7,001. It's covering all your bills and expenses, but you want to travel more? You want to do all this other stuff? Maybe you want $12,000 coming in a month. So from that point, you want to figure out how to continue to build that passive income number. You were mentioning a lot of people have these retirement plans, 529, 401k, all this different qualified plan stuff, money out in the market. We want to ask you, do you not think it would be smart to have some guarantees in your life? Something to maybe fill that stopgap when the market's down and you don't want to take a double whammy by pulling it out when it's going to compound in the opposite direction against you. So oftentimes we're not telling you to not do those things out there, but it's also, let's put some more guarantees in your life. So if something happens and we're in a down market, you have some certainty that you can pull from to kind of fill that space for you.
That's a good point. Let me throw out some names here that, unless you're writing things down, you won't remember. But Dr. Wade Pfau, Dr. Tom Wall, they have a lot of good information on exactly what Sean said. We don't often bring it up in the way Sean brought it up, and I love it. What Sean is saying is that if you have a guaranteed pool of funds, capital that's accessible to you, income tax free, that is actually rising, most people out there that we're talking to are going to have some sort of qualified money.
Sure.
So many of us don't here as coaches. One reason we started this at a time in our life where we got out of that game.
Yeah. Don't anymore.
Yeah, don't anymore, right? Don't anymore. Most people are not in that game. They're not going to step out of it. We coach plenty of people who are in the generation ahead of us. And that generation of folks have money that have been in there 20, 30 years at this point.
Yep.
They're looking at retirement as on the horizon. They can see it coming. And this system of housing your wealth and whole life insurance will complement and supplement what's going on over there, especially, Sean said it well, in the down market. What
Absolutely.
happened? Do you want to pull from something in a down market where the market is influencing if it's growing, if it's going, but do you want to pull that year?
No. Like
No.
you said, it's a double whammy.
Double whammy. So what if you had the guaranteed supplementary income, non-taxable, by the way, in your policies because it was growing at a clip of, we didn't even get into the guarantees. Dividends are extra. That's what our little fourth cup is here of shots. But I think that's a great way to think about it. Just in case you want to look at that type of stuff more deeply, once again, that's Dr. Wade Pfau, P-F-A-U, and Dr. Tom Wall. If you look them up together, you'll find their stuff. But PhDs in like retirement income,
Right.
PhDs, and they'll tell you, you need that whole life insurance as a stopgap guarantee.
Mm-hmm.
And they may not be as adamant about what we call infinite banking and what we teach and preach around here, but they're saying whole life works every time.
Right.
You
And
might want to have it.
some of those aspects that are beneficial, of course, would be that if you're in that crunch, you need access to capital, you need some money, but you don't want to be tapping into those qualified plans while they're in a downturn. Let's say you don't have to ask for permission to get to money.
Mm.
If you have one of these contracts that we're talking about, one of these whole life policies you don't have to ask permission. And then another one that sticks out to me, of course, right away is there's no penalty to get. So no 10%.
No. Yeah,
So-
you don't have to wait to a certain age to do it.
Right.
I mentioned I've got policies on my children. All of us do. All of us are dads. And we have access to the capital in their plans, in their life insurance contracts. And these are babies.
Yep.
Right? We got babies at home, all of us. So good morning to Liz out there. Liz DeRocco getting in my Thursday call this way. So pause right here and tickle me this. Hold on. Did you guys live in the same town? Sean, did you used to live in the same place that Liz lives now? Did I hear that
pretty
earlier?
crazy, right? And I didn't know her, but yes, we did.
Very neat.
Yeah, I didn't know that at all. So Liz is one of our coach trainees around here. She's helping people with this understanding as well. And she has, in her former life, worked in the restaurant industry and service industry. And Sean was probably partying so hard. Liz did not want to know him, is what it was. Liz saw you at the club and she didn't want to talk to you. But now we're both, stars have aligned and we're back together again, folks. Is that true, Sean?
I haven't partied in a long time, man. I used to, in my college days, I worked down on the bars and obviously, again, played Division I college basketball. So that came with all the things that it comes with. But no, man, I've been old for a while.
Okay.
I don't
All right.
party anymore.
All right. Navigate Your Ventures has something to say. Can we put that on the screen?
Yeah, it's a great testimonial.
All right. It says the policies are great. Warehouse your wealth and earn guaranteed interest along the way. Now, let me pause right there. Thank you for that comment. And yes, dividends are extra beyond the guarantees.
Yes.
We did not triple down on that on this particular conversation topic right now, just because I'm looking at that. But sometimes when I look at social media, Jesse, I see people think that the dividends are what we're supposed to be looking at for guaranteed growth.
Bonus.
Those are bonuses. We actually have guaranteed numbers of growth happening anyway. Dividends are extra from mutual companies when you have participating policies. Appreciate that.
Yeah. And again, to Sean's point, real quick, not to derail you, I want to get to the rest of this too, but Sean mentioned earlier, and I'm just trying to underscore it, when it comes to passive income, how much risk do we want to have? Wouldn't we like some guaranteed access to
100%.
passive income in the future? Yeah.
And once again, if you can play the passive income game, guaranteed plus bonuses in whole life insurance, isn't that what the American dream probably should be in the 21st century?
Absolutely.
Now, I'm not saying that that is necessarily your modus operandi when
Right.
it comes to vocation. Understand that, just in case my mom is listening. My mom has been married to 2 men in ministry. I'm not saying that you should change your vocation. I love what you said,
Correct.
Jesse. I want to work in the areas I'm working in now
Yes.
and other things for as long as I can do it. I'm in the right place. I don't want to stop doing those things. We're just talking about your money. What if your money can work in a passive and residual environment, income tax-free use of it?
Yes.
Then can't you do better work in your vocation areas,
Absolutely.
whatever they are? You are the asset. So now let's get the money working so it fuels you.
Yeah.
It fuels what your fortune and freedom and lifestyle is supposed to look like.
Is. Yeah. Yeah. And at the end of the day, those are the 2 ways for us to earn, is whatever our vocation is. So people at work, and then the other's money at work.
There you go.
Put it to work.
Okay, so there's so many other topics we could get into that we like to get into. And if you want to get those questions answered for you, wait, what about taxes? What about debt? What about my vocation? I'm not in the right spot right now. They got me making $10 an hour over here, something like that. You can ask those questions. Maybe we can give you some thought and some insight and some help. Right now, I'm doing a little bit of a mental reset, and I'm utilizing AI to help me think through some things. If I want to be here at 51, so I turned 41 this year. If I want to be here in 10 years, a decade out, 51 years old, backtrack me through a scenario. Let me tell you a little bit about myself. Let me tell you about the
Do it.
family.
And then,
The
then go ahead
kids.
and prepare to ask that AI about how to get a strong back. I want to hear.
It said, look, told me to take a picture, and I sent it, and it said, no, that foundation is firm, sir. That's what it said. It called me sir. And I said, that's right.
That was very
Then I moved
polite.
back on to my money. No. Okay. So we got some great trainers in the building, not just in your finances, but also in your fitness. Sean, he's into it. Liz, she's into it. Jesse, he's into it. Jay-Do, currently just doing the sauna, nursing an injury right now. Okay. What other topics, conversations, or controversies do you have?
How about that second half of the
Okay. Navigate your ventures. Let's put it back up on the screen if we can. It says, I'll read it. Jesse, you answer. High cash value is why I got my policy. It took me 2 years to begin to group what I truly have, to grasp what I truly have. Jesse, what do you say?
Yeah, that's my experience as well, is that I can remember having one policy because I saw this idea of saving and spending money at the same time. Amazing. Control over my money. Amazing. Compound growth, dividends, etc. All these different factors. I started to grasp also elements of them to a certain level by having one policy, using one policy. And then in that first year or 2, just like you said, navigate your ventures, we ended up even getting a second policy probably 8 months after our first policy. And I remember just having these follow-up epiphanies. I remember having, a walk and have something click where I really grasped one of these many elements that we're bringing up right here: passive income, dividends, future, all these different things. And it was just an evolution, and it still is. A decade into this thing, this is just our first decade of, this journey of financial independence and freedom and autonomy. So the follow-up epiphanies, I believe, will continue. So I appreciate you sharing your personal journey in these first couple of years.
If you're getting some mental gymnastics on this and you can rethink your thinking, we'd love to know. Throw it in the chat right there and let us know where you are. It took me longer than that. I believed in what was going on. I was around people and around the campfire, kind of like this, that helped me believe. But 4 years, I think, for me to, what I would say, grasp.
Cool.
4 years. Yeah. And during that time, Jesse and I, we would be on the phone. We'd be talking about this. And we say, I found a book, or what do you think about this? Or do you understand the difference between this company and that company? Both of us ended up with policies from different companies after a couple of years. And so we're like, we were grasping.
Yeah.
Grasping.
sharing best practices.
but I don't know that if I was getting a hold of it for a while. So
No, for sure.
appreciate that. Navigate
I
your
want to make
ventures.
note about that, Jeremiah.
Yeah.
I think one thing to notate there is Navigate Your Ventures didn't say he waited 2 years to get involved and try and figure it out that entire time. It was, hey, I have an understanding of how this works, and I understand that if I get involved now, those 2 years that it took me to really figure this out and learn, I will also be earning. I think that's a big thing that people miss is I want to know everything before I jump in. You could ask Jeremiah, you can ask Jesse, myself, any of our other coaches. We don't know it all right now. It's a constantly changing landscape. But what we do know is once you get started, that clock starts running. The later you wait, the less time that clock has. And so the earlier you start, it's all about that compounding. So if you want to take full advantage of getting the absolute most out of this, because these things are okay in the beginning, they're really good in the middle, and they just get unbelievably good at the end. The sooner you start, the more of that end you'll actually get to enjoy and live through. So it's never-ending learning process, but don't wait to start until you have all the information.
There you go. So let me shout out here to Jake Doster. We can put his comment on the screen. And one of the things that Jake did, and I just marries up with the fact that I pulled out the handbook, is he got a copy of this book to rethink his thinking about finances and money and about becoming his own banker. So this is the 5th edition book of Nelson Nash's BYOB. We highly suggest you go grab this to understand some of the foundational truths about the contracts we're talking about. So Jake said, I met his lovely wife. They came to my office in South Carolina. It was a great little meeting, but I could tell, he says it right here, she was skeptical. She's still skeptical. Well, one of the things that we all need to understand is a concept is how you're going to maybe implement and practice this. Life insurance is a contract. So I don't have to be skeptical about the contract. What's interesting about the guarantees of the money that I buy with premium, I buy money, death benefit, is how many people are skeptical about that when their car insurance ain't going to pay at all because they don't plan to crash or they don't crash. I mean, God forbid they do.
Right.
But we
Home
don't question that.
insurance.
So we've got to understand that we're talking about a product and a process here on this, and we kind of go back and forth and interchangeable with some of these topics. The fact that the dividend bought me more insurance and more cash values is how the product works. Whether or not I use them, lose them, abuse them by being a poor banker or a poor steward of money, that's process. That's
right.
process,
And
not
Liz
product.
does share something for the product aspect of that in her dividend.
Let's
is
see
awesome.
it. Let's see it up there.
Yeah,
Okay.
Most recent dividend was $237 first year.
All right.
Fantastic.
Liz is on our YouTube channel. Looks like Sean, Coach Sean. Did we just change up? No, he froze a little bit or something. Just changed up his lighting out there. But $237 of a dividend. There he's back on his on her first policy, first year dividend. Love it. So I'm assuming it bought similar numbers of death benefit as one of mine, maybe about 1,200 plus in new capital that must flow toward Liz's family in death or in life. She can choose how to use those dollars, but it's guaranteed to come out of death right there.
For me, the impact is always, I mean, you love seeing whatever the actual dollar amount is, 1,200, et cetera, dollars. Beautiful. For me, I love seeing, okay, this $1 bought me 3, 4, 5 or more dollars in the future. That for me, it's like, what?
Let's go.
Fantastic.
Navigate Your Ventures says, true, I chose to act instead of wait, commenting on what Sean was saying. It is infinite for a reason. Aha moments happen all the time now. Second policy took me 19 months to get. Hey, you're on your way. 19 months is a beautiful time frame to learn and consider. Wait, I want to expand my system. I want to have more money under my control. I want to have guaranteed more dollars that flow toward us. Remember, ladies and gentlemen, as we look at the 3-cup setup here, cup number 1, premium, when you pay dollars into there, you write a small check to an insurance company. They must pay out a big check. Can we stop right there for a second?
Sure.
We write them a small one. They have to write a big one. It's whole life insurance, capital W.
Period, as you say.
Period. Okay. It has to. Okay. Liz came up with her numbers. Okay.
Awesome.
All right. She said she must have looked it up. Love it. Her $237 passive dividend,
Just the dividend.
just the dividend. They offered her, they asked her where you want it. And she said, leave it in the game. Leave it in the game. So that dividend. So if we're looking at the 3-cup setup now, we have a shot glass with a little dollar sign on it. It's red because we look at premiums as the red cup, the first one. And she said, take that 237. I just dropped it into the premium cup. Well, premium now has to buy
Mm-hmm.
death
More.
benefit. It bought her $1,170 of usable cash into her system. That means the death benefit went up automatically. Premium buys death benefit. Premium buys a bigger system. And that's how much of it, $1,170, is usable of the death benefit for her. She can get to that with the loan provision, income tax free. Their money, 237, turned into more of their money, 1170, that she can use. What's up, AJ? Glad you're here this afternoon. We got a few more minutes. We want to walk and talk you through things right now to help you understand how the product can help you with the process.
Yeah.
But most people don't understand the problem, Sean. In the last 10 minutes, we're going to tackle it just a little bit. I'm going to leave it open-ended. But because they don't understand the problem, the product and process don't make sense to them sometimes at all. Can you talk about the problems, plural, there's lots. What are the problems that we can solve with this product and process?
Jeez, there's countless problems. I think kind of Jesse can touch on a bunch of them, but I think the one that I was chatting with you about earlier is not exactly something that this particularly will solve. This is definitely going to help solve it, but it's just understanding how your money's flowing. Like, how many people that are watching this right now have a budget that they track on a regular basis? Their income, their expenses, all of that stuff. I think one of the biggest problems is you get to the end of the month and you're like, I should have money left, but I don't. And so you guys have made podcasts and videos about this, about creating a budget and understanding what's coming in, what's going out, and making sure that you're kind of utilizing your dollars correctly. So I think at the core of all of it is people just don't really know where their money is going. It's so easy to spend. And so they don't have the ability to start doing some of the things, saving, investing, all of this stuff that they want to do. So I think when we address the problem of understanding how our cash flows, it brings a lot of clarity to, oh, I'm doing all of these things that aren't really serving me or the goals that I want to get to. So if I remove some of these things from my lifestyle and redirect these dollars into positive things, they can have drastic changes. Those positive things tend to be paying off debt, putting in investments, whatever. We advise funneling that money through your policy first, capturing it so it's working for you for the rest of your life, and then taking that and dispersing it to either debt, consolidation, repayment, investments, whatever it is that you want to do. But the idea is we take so much money in, and then that money never does anything for us again because we spend it. So I think the biggest thing that infinite banking and properly structured whole life policy does for you is it allows you to capture your money so that it earns for you for the rest of your life.
Mm-hmm.
What do you say to that, Jesse?
Yeah.
Problems.
Yeah. In a recap, beautifully said, Sean. Most people, I didn't. I actually wasn't that budget person that you're talking about. I feel like for me, when I was exposed to infinite banking, this idea that it really just opened me up to the matrix that was around me. And what I would say is that me and everybody else, this is an opportunity to look at exactly what you just described, which is actually deciding intentionally where your money is going to flow to. So right now, we all had our money flowing to a business. The name of that business is a bank. And I mean, we just did it because that's what everybody does. You get paid on Friday. Well, you have that money go to the bank, direct deposit, and it's somebody else's business. So Now we have a place to intentionally send our money first, like you just said, but at least now it's intentional. And then after that, we could talk about passive income. And after that, we could talk about dividends. And after that, we could talk about legacy. And after that, we could talk about, what we want to do later in life, encore career, whatever. It's just like investments, so many other things that we could talk about, but it all begins with considering where our money is currently flowing, like you just said, and could it flow to a more private place where we have control and profitability.
Hold on, Jesse, I love that. Did you say encore career?
Sure.
Never heard that before.
Really? I mean, so to his credit, because we would have a different, view on whole life insurance. Dave Ramsey Solutions. That community talks about encore career. Really strongly.
Wow, interesting. And you're going to need an encore career, ladies and gentlemen, if you're stuck at a W-2 you don't like. Because that's what you do it. Well, that has benefits.
Or even when you do. I mean, let's say somebody takes a military. This is a real set trajectory, right? Military career.
My family.
The bench. Yeah, I know. So you get this, and lots of people wouldn't. We've got lots of military folks that are clientele. If they're going to stick in that career because they do love it, what does it look like? Well, it looks like 20 years, and then maybe they go beyond that.
Yeah.
But at that 20-year mark, they've completed that career in a lot of senses.
Yeah, and they obviously have a lot of life left.
But if they started that career when they were 18 or 20 years old, they could be graduating full retirement at 38
40
years
years old.
young.
Right.
I mean, so yeah, encore career.
I love that. But encore career, I just never heard that particular phrase, and I like it.
Cool.
I like it. Encore career. Many of you are going to need that out there, and lots of us,
Yes.
because of the poor habits and the poor policy in our country with the federal government and the banking system, you're going to need to be productive in your near your whole life. You're going to need to be productive.
I would
Let's
encourage
see.
you to.
Let's figure out how productive your money can be.
Yeah,
Let's figure out how productive your
That's it.
income can be in this environment here. Navigate Your Ventures said a couple things here.
Mhm.
But AJ, appreciate your feedback. And make sure that you're subscribed to this channel over there as we get close to wrapping up here. We want to hear your guys' final thoughts about getting on the calls and walking and talking through these conversations with people. Did you know you can chat with us anytime as coaches? We're going to talk about where you can find our coaches this week so you can get better questions answered about your personal situation. But here we go. Navigate Your Ventures says, well, one of the things, it's just general comments here. I love it. No questions in particular, but thank you for how you're breaking down the mindset and policies. If you don't understand your own mindset or what's happening around you, it doesn't matter if we explain policies to you. So that's why we do it this way here. And for all of us, I believe all three of us who are coaches here, there was a lot of confusion. We got involved in some poor policy planning. Sean has conversations about that. Well, I thought I was in the right place, but I wasn't with policies that I got. Jesse and I did not have all the coaching available to us as we're giving to you on our Facebook page and on these accounts. So we were hungry for freedom in our finances, and we thought this was the path. We were right for our foundation, but we just needed more community.
Mm-hmm.
So that's what we're doing here for you. We hope you do join us at Infinite Bankers on our Facebook group. The Infinite Bankers Facebook group is a great place to stay connected so you don't lose us, or, of course, following any of these channels that we're on live right now. Sean, are you taking calls this week, baby? Let us know where we can find you.
I'm always taking calls. So, you guys can find me. My social media, Legacy Life. You can find me on YouTube. You can find me on Instagram. I do a podcast called The Cash Flow Chronicles. But my calendar is posted all over all of that stuff. So head on over if you particularly want to talk to me. I'm in the Florida area down here in Pensacola, Lower Alabama, Florida area. But always ready, always happy to chat, always looking to help educate you guys.
Jesse, how about you?
Yeah, man, you can find me at durhamtalents.com, and we're all active in that Facebook group as well. Most of my stuff's on YouTube. Yeah, taking a call here at the half an hour.
Love it. Ladies and gents, any other closing comments or thoughts or questions? Remember, you want to learn as if you'll live forever. Gandhi said it best, but you're going to live as if you'll die today. So we are going to do that and put that into practice. There are a lot of foundational principles here that hopefully, like Navigate Your Ventures, you picked up on as we walked and talked through this system. How you can get started specifically is going to be on one of these free coaching calls with one of my guys here, or hit us up directly by clicking the link. You might want to start with our video, saveandspendsystem.com, for a more comprehensive view of what's going on, how to understand this from scenario examples, what banking is all about. And of course, you can even see some numbers. If you are in debt, you definitely want to check out the last few minutes and the last big example that we have on that video, because we're going to utilize from day one a product for the process of getting out of debt. We're going to solve your problem about all the interest that you are paying to third parties. Nelson, appreciate you being back with us each and every week. We will be back next Thursday, noon Eastern, to walk and talk you through code cracking cash flow.
Let's go.
Peace out.
You are now tuned to the banking bro. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.